banking industry recently released an analysis for the first half of the year. Join me and the investment team as they get to dive into the analysis of the banking sector. According to the analysis done, can you give an overview of the performance of the listed banks in the first half?
Okay, so we themed our report for this half 1 2024 as sustained profitability owing to improved business environment, and that's reflected in the numbers. So for H1 2024, core EPS or core earnings per share for the listed banks grew at a rate of 28.9%, which is a significant improvement from the 14.3% growth that was recorded in the same half in 2023, half 1 2023. And this was attributable to an improved operating environment. Like we have said, inflation eased from 8.5% in the first half last year to 5.6% in this half. At the same time, the currency also showed some strength, appreciated, and by the end of half one, it had appreciated by 17.2%. And if you also just look at the general business environment, and this is measured using the Purchasing Managers Index, which came in average for H1 2024 at 50, which is higher than the 47 that was recorded in the same half last year. So these are some of the factors that contributed to the improved performance or the sustained profitability for listed banks in half 1 2024.
What factors contributed to the increase in non-performing loans ratios for the listed banks?
So first, the non-performing loans ratio increased in average to 13.4% for the listed banks from the 12.7% that was recorded in the same half last year. And almost all the banks registered increase in non-performing loans, which by the way signifies deteriorated asset quality, except three, which is Standard Chartered, I&M Bank, and NCBA Group. And part of the reason for this deterioration in asset quality for the banks was the elevated interest rate regime in the country, which was occasioned by this monetary policy decisions during the half. The Central Bank of Kenya decided in their MPC meeting in February to increase the central bank rate, which is the base lending rate, by 50 basis points to 13% from 12.5%. And they maintained it at 13% in their April and June meetings. So this elevated rate meant that the cost of borrowing again went high, and given the difficult economic conditions and the cost of living that is known, most people who borrowed these loans were ultimately not able to pay them back. This has, however, we have, however, seen a cut in the rates for August, and we expect further cuts in the coming months of the year, or in the coming sittings of the MPC, and we'll monitor and see what changes that then brings to the non-performing loans. However, it's also important to note that the elevated interest rates was not the only factor that affects non-performing loans, and we expect that banks will employ a variety of strategies to try and curb the issue of non-performing loans.
By non-performing, you mean they're not being paid?
Yeah, so these are loans that were taken and are not being serviced back.
Explain the roles of banks in the financial system.
So basically what banks do, they accept deposits from maybe people or clients or businesses, and then now they facilitate lending to businesses who want to do something with it. Yeah.
So businesses, investors,
yes, so basically clients, investors, even people, if you want to maybe finance something, maybe pay for a loan, buy a car, pay for school fees. So that's basically what banks do. They take deposits from clients who deposit in them, and then they pay out to the people who want to take loans from them.
Can you explain the most common types of bank charges that customers should be aware of?
So for banks, there are normally different charges according to different banks. So the first one, you may be asked for account opening fee whereby you have to have a minimal amount in your account so that it can be active. The second one is maybe monthly service fee, whereby this fees is used to run the accounts. And the third one is transactional fees, whereby it's charged when you transact the fees. Maybe you're trying to send the money to someone or you want to withdraw.
With recent developments, some banks do have charges and some do not have charges. Can you just give brief numbers, and you know they do charge transactional fees and some banks that don't?
So for banks, it depends with the banks how they are offering. Like for instance, there's a bank which in their portfolio they are not charging transactional fees to maybe withdrawing to M-Pesa or Airtel. So this is because it's such a promotion to them, but now you find that they may have different aspect of getting that money back in terms of a monthly transactional service fee.
So like for INM doesn't charge the transaction fees.
Yeah.
So you are saying they find a way to circle it back by maybe charging a monthly fee.
Yeah.
Another question still on the charges. When I receive money from maybe an account that is paying me, money comes to my account, I have 14,000. Money that has been sent to me is 14,000. But when I go to my account, I find it's 13,700. Where is the 300? What part does it fall on those charges?
From my experience, it's normally the sender who bears the transactional cost. So if I'm sending to you, I'll have to incur a cost. So if I want to send the money to you and it reflects on your side as 14,000, I'll have to top up something like 200 so that it can cater for RTGS or if SWIFT transactional fees.
I get that.
Yeah.
Take this. I'm the one sending money.
Mm-hmm.
I've incorporated that 200. Ishakatwa from my side. But then when it gets to my account, I look at it, I checked a statement. I see some fees. I saw something like maintenance, what are those fees?
So basically those are the ledger fees, which it's used to maintain the system, and it's like a service charge where it can be charged monthly so that the systems are running up and smoothly. So it's important to note that when you are choosing a banks that you want, you have to consider all these factors so that you may get exactly what you want.
With the current report, what bank do you think is the best when it comes to like charges, the fees? What would you recommend? Like for someone who's just starting out, like.
Okay, I wouldn't say any specific because it depends on the kind of person that you are, what you want. Someone may want to go to the bank which doesn't have maybe transactional fees and such. Maybe others want a bank which will offer them a good rate when they go for loans and such. So basically it's different. Others want banks which you can easily access your cash. What I mean is maybe you can they have maybe a website or apps that can facilitate easy transfer of funds. So I think that's a point whereby it depends with the person and exactly what you want. Yeah.
Thank you.
Where is rolling and action?
So according to the report, to the analysis that has been done by the investment team, what role did interest rates play in the profitability of the listed banks during the first half of the year?
Interest rates had a major impact on the profitability of the listed banks in Kenya. So in the first half of the year, we saw the average yields of the 91-day government paper increasing to 16.2%, and that's significant compared to the 10% that was recorded last year. And while this improved the interest income for the banks by around 30%, it also increased the interest expenses, which squeezed the overall profitability.
So, in your own opinion or words, how has the adoption of digitization and unbranched channels influenced the banking sector in the first half of the year?
In the first half of the year, we've seen a significant shift in how banks operate as a result of the digitization and the non-branch channels. For instance, two of the biggest banks in Kenya, that's Equity and KCB, reported that a majority of the transactions are actually taking place through these channels. That's 84 and 72% respectively of their transactions. And in my opinion, I think the digitization of the banking sector has improved the convenience for customers and also really streamlined the overall banking operations.
Were completed in the first half of 2024 with regards to merging and acquisitions, and what was their influence in the regional expansion for Kenyan banks?
Mergers and acquisitions have played a key role in helping the Kenyan banks expand regionally. One of the key deals that were carried out in the first half of the year was Access Bank Nigeria's plan to purchase the National Bank of Kenya from KCB in a deal worth around 13.3 billion Kenyan shillings. And these deals are crucial in the banking sector for Kenya, as we've seen in the first half of the year. Some of these subsidiaries have really reported a really big proportion of the profit after tax for the banking group. For example, equity subsidiaries have reported that 55% of their profits came from the subsidiaries, while the KCB reported that 37% of the profit came from the subsidiary.
According to the analysis that was done by the investment team here, what would you say are the factors that helped Absa Bank maintain its top position in the first half of 2024, considering it was still top at the first half of 2023?
Okay, so according to our analysis, we ranked Absa as the first bank that is looking at the franchise value and intrinsic value rank. So the bank, that is Absa, experienced an improvement in terms of the management quality and earnings quality. And we looked at this in terms of the decline of the cost to income ratio, that is while factoring in the loan loss provisions and factoring that out. So they recorded a decline in terms of that, meaning they recorded an improvement or experienced an improvement in terms of managing their costs that they have relative to the incomes that they also have. And also the bank experienced an increase in terms of the net interest margins, meaning they earned more from the money from the core business, that is earning more from their deposits in relation to what they pay out as liabilities. Yeah, so I'd say those are the main factors that really stood out in terms of their performance and their rank.
According to the analysis done, what can you say is the reason for Standard Chartered Bank's significant improvement in ranking since it went from position 9 to position 3 in the first half of the year?
So yeah, like you said, the bank rose up 6 points to position 3 from 9 in half 1 2023, and I think this is because of the improvement in their ROE, that is the return on equity. So the bank improved in terms of using their shareholder funds to generate profits. So, and also similarly to the case that I mentioned for Absa, which we ranked as number 1, they recorded declines in terms of their cost to income ratios, meaning they improved in terms of managing their costs relative to their income.